Hi everyone, today let's talk about the Fed minutes, as well as Verizon Stock and their most recent upgrade. Then we'll look at seasonality, then we'll look at the charts, then we'll finish up with my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the Fed minutes came out and they were mixed. So they definitely didn't want to go higher. They agreed that we were at the terminal rate, which is good. But the question of when we might see cuts this year is still pretty blurry. None of them really agreed on it. You can see several members agreed that they would get back to that 2% range in the coming 3 years, but that really gives no certainty for where we're going to be this year. And they mention it here, unusually elevated degree of uncertainty on the future policy path for the Fed. So we're still looking at the 3 cuts based on the dot plot. But when are those going to happen? We don't know really at all. And that does conflict pretty heavily with what Fed futures are predicting, which is that 6 cuts this year, which would bring us all the way down to that 3 3/4 to 4% range. And I've said this many times, I think that is optimistic. I've been expecting this move down that we're seeing right now. And I do think the Fed minutes is starting to get priced in with that uncertainty. I think markets were just too optimistic, and now we're seeing a reversion. Outside of the interest rates, they do mention that the central bank has shaved $1.2 trillion, allowing those bonds and notes to mature, rolling off the balance sheet instead of reinvesting in them as usual. So that is the quantitative tightening. We've talked about that several times on the M2 charts. The M2 supply is getting smaller, except for the most recent price action that we've seen from the October low to current levels on M2. But understand that the total outstanding currency is getting smaller generally for about the last year or so. Moving over to Verizon stock, I think I might include a little bit more individual stock analysis, whether it's in this video or in separate ones. Let me know if you want to see more of that. But let's talk about Verizon here. They did get upgraded. The stock was down 4% in 2023, but so far this year, it has had a massive rally, moving up quite a lot. Just today, it was up 0.72%, so recouped almost a quarter of its losses for all of last year. Now, Verizon's not a big grower, but this is a company that pays out a very consistent dividend, and right now their yields are up in that 6.5 to 7 range. Even with this most recent rally, you can still get some decent yields on this stock. It's also worth noting that AT&T as well as T-Mobile did see up days, so telecom as a whole could be rallying, but it does seem like Verizon is outperforming. And like I mentioned, very, very healthy dividend, nice little upgrade here, and everything looks pretty good for Verizon. They also mentioned a $45 price target, implying 16% upside from current prices. So if that comes true, then you're getting awesome gains along with a dividend. Like I mentioned, dividend is up around that 6.5 range. So if we did see a return like that, you'd be up in that 20% return on Verizon. Moving over to fear and greed, we did finally step back into greed. We've been in extreme greed for more than a week. Most of the underlying metrics are still in extreme greed, as you can see here. Market volatility, still neutral. Safe haven demand, fear. Junk bond demand, still in greed. But the major ones that I look at, all of these are in extreme greed. And that does indicate to me that we still have more downside to come. Moving over to seasonality, you can see in these election years, we do tend to have some weakness early in the year, and that is what we're seeing. The Russell 1000 is typically the weakest. Russell 2000 generally in that 0 to 0.5% down during that first 2 weeks, and we've seen a much larger move down than that. Obviously, we rallied super aggressively into the end of the year, so that could be contributing to some of the losses. But understand there's generally some weakness here early in the year. And then towards the end of the month, you can see we are generally closer to that 0 mark, even on the Russell. Understand that this is trading days, not dates. And then the NASDAQ, typically the best performer during this period. Moving over to the economic calendar, some of these factors came in a little bit better. So manufacturing employment, better than expected. Manufacturing PMI, also better than expected. Prices, lower than expected, which is good. JOLTS report, lower than expected, which in my opinion is good, even though it did not prop up markets here today. Then you got Atlanta Fed now, 2.5%, so that's better than expected as well. And then we talked about the Fed minutes already. And then looking at tomorrow, we do have the ADP employment change. That'll be interesting, along with initial jobless claims, and then continuing to watch that Fed balance sheet as they continue to roll off numbers like we talked about. and then global services PMI at 945. Moving over to max pain, still sitting at 470. We're a little bit below it now. We haven't been below max pain in a while, but we're below it now. Put wall right around this 465 to 469 area. We have not been able to get below that, so we might be finding a little bit of support in that zone. Might get a max pain finish this week. That could be interesting. 476 to the upside, that's your call wall. 480, even bigger call wall. Put call ratio continues to grow a little bit, 1.14. Total options up over 1 million, so it does seem like we're kind of stuck in this range here now. Doesn't mean it can't go lower down to 465, but we're definitely into the area where we're starting to see some resistance from the puts, in my opinion. Moving over to the charts, we are right on time with that head and shoulders. So we had the left shoulder, head, culminated in that move down to the neckline. I'm expecting a bounce here. We'll see if it comes through. Did touch that neckline just by a penny, bounce from that level after overthrowing the trend line here on the hourly chart. Still a bearish candle, so 0.82% to the downside. Not great on the day, but if it's going to bounce, it should do it here. Then we should get that right shoulder like I'm looking at here off of that 21 EMA at 468.16, which does coincide with what I talked about on max pain, expecting this to be an area where we find some support. Hit this range on that right shoulder, then we start to break down. That's going to be a much bigger down move if that culminates the way that it looks like it will. Otherwise, on the daily chart, bearish momentum, bearish RSI, everything continues to look weak here. On the spiders, just looking at that potential bounce here in the shorter time frame. And based on timelines, this right shoulder would culminate around the third week of January. Moving over to the NASDAQ, you can see similar thesis, fell in the pre-market, fell throughout the session, continues to respect the 9 EMA here on the hourly chart, moved down to my next level, 398.34, does seem to be finding a little bit of support there. Nothing really here on the daily chart. In terms of support, you can see we broke the 21 EMA, gapped through it, as well as VWAP, bearish momentum, bearish RSI. Everything continues to look weak on the longer time frames. Let's go ahead and look at the 4-hour chart just for a moment. So you got the 144 sitting at 395.12. That's just behind my level here at 395.85. And then let's look at the 12-hour chart just for a moment. Okay, so we're sitting right on top of that 55 EMA at 398.63. We did overthrow it to my level, so a little bit of potential for support, not oversold yet on the 12-hour chart. Looking at the 4-hour, you can see we are still super oversold, and it does seem to be waning in terms of momentum. You can see we did get a step towards bullish here on the 4-hour chart. If this is going to culminate more like a double top on the NASDAQ, this would be your midpoint here at this support. Then you would expect a rally up to either a double top or a lower high setup. It's obviously not trading the same way as the SPY did. That left shoulder head, you would have expected a bounce here. It didn't do it. Broke right through that level. Now you have to look for a rally up, double top type setup, or a lower high and a dip low. Moving over to the Russell and the Dow, you can see the Russell sold off massive. Again, 2.67% to the downside. Big bearish momentum, big bearish RSI here on the daily chart. Took out VWAP as well as the 21 EMA. Looking at the 4-hour chart, you can see we're below all of the shorter term EMAs here. Big bearish momentum, have not seen a turn up yet. Oversold conditions there. Looking at the 12-hour chart, looking at that 55 EMA down at 191.89. Could get into that zone and find some support. It is worth mentioning we're at the trend line, which is interesting. Something to watch there if it breaks 193.83 tomorrow, and then the 55 EMA just behind my level, like I mentioned. Looking at the Dow, however, you can see it's right on that 55 EMA on the 4-hour chart. Does continue to consolidate, continues to look much stronger than the other major indices. It's not rallying or anything, it's just not collapsing the same way we're seeing on the other markets. Moving over to the equal weighted S&Ps, you can see we've been in this consolidation. It has been selling off, which is interesting. Big down day today, 1.48%, one of the weaker days we've seen going back here to the 20 December day, which did reverse very quickly. Looking at that low here from that day, right at the 21 and VWAP, bearish momentum, RSI breaking down. Next level for me would be 153.19. And then looking at the 4-hour chart, you can see we are below all of the short-term EMAs and SMAs. And then like I mentioned on the other 12-hour charts, quite a long way down to that 55 EMA, sitting just above my level of 149.82. And this highly traded zone at 150.26. Moving over to the ratios here just for a moment, you can see the Russell is no longer outperforming. We got all the way to my level, 2.31, all the way from 2.59. It had been a massive outperformance by the SPY. We saw a reversal down to major support. Question is, what happens now? You could argue this looks like a left shoulder head, potentially forming a right shoulder here. That could be interesting, but this does look strong here to the upside now. So Russell no longer outperforming, bullish momentum on this ratio. And then you can see the NASDAQ is actually underperforming as well. So we have the SPY as the top performer. I don't have a Dow ratio up, but I'm sure that would be the top performer above the SPY as well. But understand growth is struggling, small businesses struggling, and the SPY is rallying. Moving over to Verizon, like I mentioned in the article, we have seen a really strong bullish week, 3.87% on the week already. And you can see we were really rallying with everything else. We got down to 30.65 on this most recent dip low, and it has been downtrending for a long time. This is not a popular stock. Was all the way up in the 60s going back to November of 20, and then it got cut in half to those most recent lows, 50% down move. Now we're rallying pretty aggressively. We have moved up about 28% from those lows, so very strong move. And if we do hit that price target, I do have a level at $44. That would be another couple of dollars per share up to that level. Does seem possible. That is your next EMA sitting at 45.02 as well. So it does seem like we're going to get a move like that. Structure still very good here. Go ahead and look at it on the 4-hour chart for a moment. You can see it looks super aggressive. I did add these trend lines and support levels here today, so I didn't have any of this going into today. But you can see, found some support here at a highly traded zone, broke out above this previous high. So we're continuing to establish higher highs and higher lows. And it does seem like this structure does look quite bullish going to the upside. Understand we're pretty overbought on the 4-hour chart. Going back to the daily for just a moment, you do have some divergence, which is interesting. So you can see big rally up to that most recent high, pulled back, consolidated, and you can see we are in overbought conditions again, but we have higher price action with a lower RSI number. So that's a little bit weaker. You don't want to see that. But in terms of structure, it looks good. We're above all of the EMAs and SMAs on the daily chart as well. Bullish momentum, and it still looks strong in my opinion. Moving over to Apple and Tesla. These looked both very weak here today. Gap down, dojied right on that 144 EMA. We talked about it yesterday. We tested it, found some support, gapped right to that level, falling a little bit after hours. Bearish momentum, bearish RSI. If that level breaks, you got 182.37 below it, and then the 200 SMA sitting at 179.78. And then looking at Tesla on the day, 4% down, gap down, fell, almost hit that highly traded zone, sitting at the bottom of this consolidation. You also got the 55 EMA sitting at 234, my support level at 232.57. Let's go ahead and extend out this trend line. Yep, so we did get a test of that level as well. Definitely interesting to see. Pushed right through this previous trend line, no issues at all. Hit this support level. Still bearish momentum, RSI still bearish, so everything still looks weak here on Tesla. I wouldn't be jumping in quite yet. I'd want to see some consolidation here if it's going to hold, but realistically, I expected to move through these levels. He had a consolidation, attempted breakout, failed. You would expect this to break down, in my opinion. Moving over to top performers for big tech, we have Netflix turning a slight profit on the day, 0.38%, and then Microsoft was down on the day, but 0.07%, much better than the greater markets. So momentum on both of these still bearish, but you can see we're well above this previous dip low. So this is still a high, higher high, low, higher low setup. If it holds here, you really want it to hold here. There's certainly a possibility. My level is 467.94. Touched that level, overthrew it yesterday, gapped below it, rallied up once again. You're showing a little bit of rejection at that 21 EMA on the daily chart, which is 474.01, which is not great. If it rejects from there, this is probably going to go lower, at least to these previous lows, around 450. And that 55 EMA right in that same zone. But it was bullish on the day, so you have to respect that. And then you got Microsoft continues to consolidate in this range. A lot of bullish things coming out about Microsoft going forward with AI and just the rest of their portfolio of products. Still looks very, very strong relative to the other big tech names, and it continues to show strength in this weak market. Moving over to staples and discretionaries. Staples was weak today, so it tested this level yesterday, gapped higher and then fell, couldn't hold above it here today. Momentum fading a little bit. I still think staples are a better place to be than discretionary. You can see discretionaries falling off a cliff, gap down, big fall on the day. First candle, 1.85%. Let's look at that on the daily chart. You can see over 2% to the downside. Took out this level here at 174.76. Next level for me, 170.68. And then all the way down at that 166.78 level is my 144 and 55 EMAs, which does give you a lot of downside potential. Also look at this volume, massive volume over the last 2 days on this big down move. Does kind of look like a double top here or a lower high setup, big fall down. took out this mid-level. Everything looks weak on discretionaries going forward, whereas staples continues to be much stronger relatively. Moving over to oil and gas and energy, both of these were positive on the day. Oil and gas, 0.91, energy sector, 1.63% to the upside. Very, very good days for both of these. I'm still expecting energy to hit 87.37. Oil and gas didn't break out the way that energy did. Next level there is 140.88. Above that, almost 146. So momentum, want to see that step up on energy. RSI looks good. Volume stepping up as it steps up. Both of these look strong going into tomorrow's session, in my opinion. Moving over to breadth, look at that candle on the 20-day average. Absolutely collapsed, 30.61%, down to that 144 EMA as well as the 200 SMA, close to this 51.7 level on the 20-day average. Saw lots of stocks breaking through that 20-day average here today. Interestingly, the 50-day average still holding quite strong at that 92.25 area. Momentum not doing much of anything. RSI not doing much of anything there. But we're definitely starting to see cracks. I would expect this to go a little bit lower here tomorrow. Test that 51.75 level, overthrow these EMAs and SMAs. Then we might see a little bit of a bounce into that right shoulder on the S&Ps like I talked about. And then we'll see what happens from there. Moving over to yields, these did not do much of anything, even with the FOMC minutes. 2-year yield, 0.25% higher, up to 4 1/3. And then looking at the 10-year, slight bearish day actually, 0.38% to the downside. Still in bullish momentum, still in bearish RSI, and it tested that 21 EMA as well as my 3.97 level. Also wicked that 4% level, that's probably the more important one, and then rejected from that level once again. So it does seem like the 10-year is going to consolidate here. 2 years showing a little bit more strength. Not much change from yesterday. Moving over to the dollar, very strong on the day. Big gap up, big rally. You can see at that 1300 candle with the FOMC minutes, it did fall a little bit. Obviously, the structure still intact, continues to make higher highs and higher lows. And you can see it on the daily chart, big bullish momentum, RSI right at that 50 line. Again, seems like the dollar is still going to head higher. Next level for me, right in that 103 area. And I would expect it to hit that resistance before we see major turning. We did test this low here from 29 November, but I don't think that's going to hold. I think we're going to push through that. And we're just seeing a little bit of a short-term pullback here on the hourly chart. Moving over to bonds, J&K did have a bearish day, 0.33%, gap down all the way to my 93.67 level. Just barely missed it, rallied up a little bit, could not fill the gains. Still bearish momentum. RSI still looks weak. Volume continues to step up on these down moves. And then looking at TLT, big gap down into this area of support. You can see it here. You got VWAP, the 21 EMA, as well as that 200 SMA right in this 97.20 area. Momentum still bearish, and we are below that 9 EMA. If it can break above that and hold, then we might see this push up above 100 once again. I don't really think that's going to happen, but it is interesting to see a bullish candle, 0.42%. Strong volume, momentum, not what you would want to see. You'd want to see this roll up a little bit tomorrow if it's going to follow through. But to me, we're basically stuck between that 100 level and the 200 SMA, at least in the short term. Moving over to volatility, move index fell a little bit, not much to say there. And then looking at the VIX, we did get follow through here today. So we gapped through that trend line, held it, rallied up to that 14 area. If it breaks above these previous highs, then we could see a push up to that 1450 as well as those longer term EMAs. Momentum bullish, RSI bullish. You have higher RSI and higher price action. So to me, this is saying the VIX is headed higher. Could get all the way to that 200 sitting at 1585. Again, indicating that weaker markets are set to come. Moving over to my accounts, I didn't mitigate quite as well today as I did yesterday, down about $460. You can see that XLE position continues to be profitable. I did roll it up again here to $86 for 42 cents credit. So continuing to make money there. It continues to cover all of my losses in the IWM. I did roll down and in once again here to 187 as the IWM did look very, very weak. And you can see I still have a $9.87 credit here. So over the next 30 days, that would give me a max profit of 197. But like I said, everything looks weak on the IWM. I do expect it to move lower tomorrow. And then looking at the Qs, I did take off my shares. I left my put position on. That was probably not the right move. I should have taken it off sooner and reestablished it. But then I'll get my shares back from that 402 position. And then I'll have my 397 put for tomorrow for 80 cents. And then I still have my covered calls here that I've been playing for the last several weeks. Overall, still slow slightly bullish going into tomorrow's session with some pretty tight stops if we see another waterfall sell-off. And then looking at my profit and loss graph just for a moment, this looks a little bit funky right now because I don't have those shares on. I'll be assigned those overnight at 402, effectively buying the stock at 401, which is not great with the Qs actually sitting at 398. But either way, I was still able to mitigate most of the downside while still maintaining my bullish position. Let me know down in the comment section what you thought of the Fed minutes and if you liked the Verizon segment and if I should continue to do single stock analysis as part of my daily content. Otherwise, definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.